Good morning, everybody. It's Wednesday, April 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here have May corn up a penny at 427.5. May soybeans were up 2 1/4 at 1176 1/4, and May Chicago wheat was up 5 1/4 at 550.5. This morning, little economic data. Private payrolls were up, rose 184,000 in March. That number was better than expected. Got the stock market to come back just a little bit off the lows here this morning. Nothing real fresh in the way of news in the ag sector here. I know looking at yesterday's kind of closing weather, they put some pretty significant rains, down through Brazil. We kind of trading back below, pre-report type levels. From a technical standpoint, I don't think that looks, overly friendly. So, like I said, guys, not a lot of fresh stuff here. We'll kick it around. Ben, maybe start us off just on, and you've been talking about some of that resistance or support levels there in May corn. And I know we're just continue to hover right around those levels here.
Yeah, prior to the report, we traded quite a bit of volume, around 26 on the profile. It felt pretty good closing above the 50 the other day, but we quickly took that out. I did note some industry analysts had noted that there had been some heavy selling to begin the month for the last few months. Whether this was part of an automated trade or someone's kind of trading strategy, we had to digest that, especially after we had a swoop higher. We left some air below the market. We filled a lot of that in. Beans on the other hand had really played with the 50-day moving average for a number of days. Traded there multiple days, maybe 7 out of 10, 8 out of 10. And yesterday, after bean oil kind of gave up the goat, it rolled over and had a pretty steep decline. I think the good thing here is that volatility is picking up. Hopefully it's not volatility just going straight down. But once you've traded an area a number of times, it starts to lose any sort of existing bids or offers in there. And the market starts moving kind of gyrating a little bit more within that frame. So, hopefully that starts to materialize and we can see corn here start to hold its water a little bit more after back and filling everything from report day.
It's interesting, Dustin, we were talking a little bit before the show, just the continue, rally in gold, in the face of everything that's going on. You've got geopolitical stuff going on. You've got, the swap market's now projecting less than the 3 rate cuts that the Fed has been talking about here for the last couple months. And so it's just kind of an interesting market, and it continues to rally even here this morning, up another, $9 or $10 here early.
Yeah, all-time highs in gold. Energy prices have been rising. Brent crude oil hit $90 a barrel again, first time in a long time. So we're obviously feeling the pinch of a negative grain market in the face of other commodity markets that are getting kind of hot right now. Copper, what I think when I think about that is, who's selling what? Is this Brazilian selling? They've got some moisture recently for their second season corn. Maybe there's some more confidence there. They don't want to get caught long again. There's, just at the tail end of their bean harvest, so it should be their glut slot. But what I can't figure out exactly is why they're still picking winners and losers. Like they choose to sell corn one day and not beans, right? Or they're choosing to sell wheat and not beans, or vice versa. And it does still feel like this is largely controlled by managed money. And then, the bigger moves are being filled in as growers need to sell corn in the process in the meantime. So I'll be curious to see what Friday's COT report says on, who is actually aggressively selling into yesterday's close. It's a delay, it's 3-day delay, but we'll get that information on Friday.
Yeah, I was going to add to that, Dustin. Like if you look at, obviously we look at, these relationships a lot. Meal, for example, is almost on contract lows. within a couple bucks. I think $3 this morning for main meal. Oil is making, kind of highs for the move. So you've got these this oil relationship. I think oil, rolled veg oils have been on a really sharp rally. Palm oil has been, screaming higher. We lost canola acres, so I think there's and obviously we're this big biodiesel sector we've been talking about for a long time. So that relationship, oil shares the highest it's been in 7 months. So you definitely have these intercommodity spreads, and for different reasons, to your point. So you see, you've mentioned a ton of times, wheat and beans like to trade opposite directions, meal and oil. So there's kind of interesting things happening, outside of just the flat price, being up or down. I think obviously all these have been kind of in bear markets, right? So like when there's a ton of selling pressure, there's also intercommodity trading. So on a given day, if someone wants to do, wheat versus beans, and there's just a general sell pressure, I think it can accentuate the moves of a single commodity in general, my opinion. I think we're seeing general farmer selling, but I think you also saw, somebody fading the report of, buying beans and selling corn, for example. So that putting extra sell pressure on corn when there's a general, hedging or whatever kind of pressure is coming in. Same with meal and oil. Beans started selling off from the highs, and meal broke $8 because oil had a bid to it. So it kind of accentuates some of these individual commodities day to day with, I think, overall fund movement, personally. And then you watch CNBC, all these kind of hedge funds. They're all seems like they're building their commodity exposure in general from the talk. So you're seeing gold and some, anything that's got a good fundamental kind of really taking off, and anything that's maybe a little burdensome on supply just struggling. And is that, maybe corn and beans are higher than they would be without that kind of buying too. So it's just hard to know.
Yeah. Do you think, with this H5N1, you think fresh money is kind of staying away from the meat and grain sector and kind of investing it into these other markets like gold and energies?
Good question. I don't know. It seems like every one of these things that we've seen over time, not that this one can't be different, is kind of overblown. At least I think maybe just take chips off the table to see how it,
let the dust settle.
Your point, yeah, let the dust settle, and all the news are reporting on it, and people, general population thinks every cow's going to give you a bird flu.
Yeah.
You've seen these over the years, right? Mad cow. I mean, these massive moves in a short period of time, and then it's absorbed and fundamentals kind of kick back in. But to look at the reason for the last 2 days, it's really tough because you just there's too many players to know.
Yeah.
Why? Just look at a chart. It's not pretty either way, but the why is really tough to figure out.
Justin, I was kind of interesting. I mean, we read a lot of stuff on a day-to-day basis, but it seems to me like coming out of the USDA report from last week, there's this notion that 6.3 million acres or 6.5 million acres, they're just going to come back. If you have a good spring, or there's just the overall industry consensus, I should say, is that, well, there's no way they're not going to plant acres. I mean, what's your thoughts there?
Yeah, I think Dustin did a good job of kind of showing where we are in history. Last year was a big year. We're back to kind of some recent years of total acres, and Dustin's point, a lot of those acres are lost in fringe areas, which makes sense in a low profitability environment. And price action is not telling us we need to plant a bunch more. I mean, here we are, pre-report lows. It's not like we're screaming higher and we're at $6 corn. Then I would say, yeah, acres are definitely flowing back in. So market doesn't seem too excited to try to bring those acres back in. Would it surprise me to see those acres if we have a really good spring, some portion? Absolutely. But I think it could be fringe areas, planting some more beans, because why not? Why not take a stab at it if prices are decent and weather's good? I think cotton acres could come up, like some of these other, areas that might have more profitability. And yeah, could you switch some more corn just because weather's really good? Absolutely. For, I think, people with really strong balance sheets and money. I think for a lot of people that have already kind of settled on that, I think the switch would be minimal. just because of the situation we've been talking about here. You know, you have to go borrow that much more money. I think it's been a tough environment already to get the financing and everything kind of settled. So it's not as easy as it used to be, for sure. So prices keep breaking through planting. I think that's a hard argument to say we're going to bring 4 million acres back in, because what the hell? I mean, I don't think that's how it works.
Well, it seems like it's sort of an emotional hedge too, that they feel like, what's the one way that things could get really, really ugly quickly is to go find a whole bunch of corn acres, or even bean acres for that matter.
That's fine, but you're going to wait till the June 30th report. So
right.
That's the problem with all these arguments, is the market's usually over one way or the other by then.
Mm-hmm.
So it's kind of a tough battle. Anecdotally, you might hear some people, but those acres that are kind of fallow or not being planted, those are in the areas that are they going to go slap some, like we said, some, if we have a big rally, go plant something because might as well try it, It's more about euphoria and like market sentiment, in my opinion. Like when things turn bullish and things look exciting, like people might plant some more acres because like, hey man, this thing could be, we could have a market here. But like right now, it's the opposite. There's nothing exciting right now for most growers. So I don't think, throwing a bunch of expenses down at these prices makes a lot of sense.
Yeah, I think that's a great point. I just thought we'd be remiss to not discuss that, given that, it seems like that's all I heard from after the report is how they find that. So,
I would say the end of that, just to add to that, as a reminder, I-State's only lost a couple 100,000, like 350,000 acres, I think, total. Yeah. So like of the 6.2 million, it was not in the I-States. So, So I think that the economics of beans on corn made more sense than corn on corn for a lot of people. And that showed up in the numbers to a small degree, even though we were hearing from, seed company data that they were selling a lot of corn, then it didn't show up in the intentions. Well, by the time we get to June, yes, I do agree we could pick up a couple million acres, but right away, I mean, from a couple years ago, cotton acres are still down dramatically from 2 years ago. So cotton's the one shining, row crop price, we might pick up, and that would be a portion of those principal crop areas. Beans, same thing. We keep forgetting that we're coming out of near 95 million corn acres last year and only 83.5 million bean acres. So we should be naturally rotating towards beans anyway. And we only had a pickup of 3 million acres. So, we could see that, that price incentive is now back above 2.5 to 1 beans divided by corn for new crop pricing. They're doing their best to try to make sure that of those acres, they're going to try to go to cotton and beans, right? That's where the economics are, at least that we see. So it's not just about like what people want to plant. It's what they can get financing for and what the rotation calls for. We would still guess that beans have the best chance for a beneficial outcome of that. And that's actually part of the reason why we're tackling bean hedging first on top of volatility advantages. So.
Yeah, that's good stuff. I think that's it's going to be interesting. Next 4 weeks, as we get a transition out of this early wet pattern that's kind of hit us the last couple of days and get guys back working. So we are going to be coming into the open here shortly. We're lining up just a little bit higher in corn from where we settled overnight. Beans are pretty much in line with the overnight markets. So as always, if anybody's got any questions, wants to go through their individual situation, operation, please don't hesitate to reach out, info@agyield.com, or give us a call. Love to chat with you. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. We look forward to tomorrow. We'll have export sales out, so we'll visit about that in the war room. And thanks again, guys. It was a good conversation here this morning. Hope everybody has a great day.
Thanks,